All right, today's August 27th, Tuesday, August 27th. And we got some CB consumer confidence numbers at 10 a.m. Nothing really new. Let me work on my Trello board. Give you an idea what that looks like. So it's just my checklist, things I just look for. I did say I was gonna go live on YouTube. I gotta work on that. I don't know, I'll get to that maybe tomorrow. Oh, I see she traded about an hour ago. A little 4 minute video. Yeah, so take a look at that some other time. Anyways, all right, starting off, I mean, we could look at the weekly, but it's really not much going on the weekly in terms of our charts. Not much have changed, despite taking out that weekly low there yesterday, turning them back on. So looks like we're heading for discount on our indexes. Took out drawn liquidity yesterday in Dow, not so much for the S. Sticking higher, and this is bearish for the block here. And with NQ, not the six sister, but failure. Excuse me, to the downside. Still went for so we did nick that really closely for dollar. Maybe we'll be moving up just a little bit, tracing a little bit more for the day, maybe tomorrow as well, and possibly reversal maybe tomorrow or Thursday. I do believe we're gonna come down here into this um, imbalance, which we already are at. Looking at this yesterday, where is our optical trade entry? Right, so here to here, that's way down there, so it's pretty low. But nonetheless, we are still within a premium of this new range here. See, range, range, range. So this is like consolidation. These are old highs, old lows. If we were to measure those out, we do have relatively good lows on here on the weekly. If we were to measure these out here, that's where our trade entry is. So it is possible that we can come down here. And today, and this week, absolutely, 800 points. Absolutely. You can definitely come down in there. We do have an inverse value gap right here, right? You can definitely come down there. So we can mark this out as like our weekly mean threshold. And this isn't a mean threshold, but instead this is our constant encroachment. Yeah, saw that yesterday during our video review. Yes, I review all of my videos just to do like a check to see if I was looking at things correctly, doing things correctly, and always looking to improve upon my processes, right? The fuck is that noise? Looking at the daily. So I got up a little bit earlier today, around like six something. laid in bed, chilled for a little bit, easing my way into getting back into things. But as we can see yesterday, this daily order block, we hit this on a 15-minute time frame at the 9:30 open and just came for these Reltigo lows on here, previous week lows. ICT says that, you know, if we are in a premium previous lows, is the highest form of a PD array, meaning that we can rebalance to that. I usually take them off my chart afterwards, so we'll put that there. Um, trying new things. So we'll see what we can make of that. This is where we are on a daily. Bearish for the block here, which we ran into again this morning. So as we can see, we have our AMD in the morning and continue down. So I'm bearish for the day, right? So we have this daily order block here. I'm just gonna remove him and put him down here. And we also went to mean threshold of the previous day's range right here. So I'd like to see a continuation to this inefficiency here on the daily time frame. So I get, let's call this daily busy. Yep, so that's where our daily, which one is this one? Oh, that's the sarcastic encroachment. Put it back up there. Daily busy, this volume imbalance we have officially closed through, so I'm gonna, here, I'll just do this. I'll just hide him. And I do believe that we will continue to come for, boom, these lows down here. All right, so as far as the 5 candle run, one, two, I mean, really one, two, maybe three, four, five down to these lows down here. But this is my target for today. And cosmic encroachment is, cosmic encroachment is here, which kind of lines up with mean threshold of this daily wick here. So let's put this here. Daily mean threshold. Right, put that there. So these are possible targets where we can see a run to. In terms of our OBs, I was looking at this one yesterday. Um, since this one is the highest one, looking at this one in 1.5, got like a little retracement here at 1, but 2.54 lines up pretty nicely down here with this, the hottest fair value gap here. 2.5 is here. We can see like a run down in this area, get a smart reversal, maybe run into an inefficiency on a lower time frame, maybe like the 4. Continue down to this 4 standard deviation down here. Low, high, lower low. This here is a bearish for the black, a bullish for the black here. This candle here. No, this isn't a bullish for the black. This is a low, high. Yeah, this is a bullish for the black. So ideally we would take this one here and extend it out. But given that we have this inefficiency here, I do believe that, people call this the unicorn setup, right? Low, high, lower, low, move up higher, order block here, then lines up with this here, right? It's unicorn setup. For some reason, I'm drawing a blank. I don't know why. But bullish. Yeah, low, high, low, low. Yep. So, hmm yeah, that one there. Okay. So, um, yeah. So again, this is our market structure shift here. Bullish for the block. Ideally, I don't want to put this on the chart, but it'll just be just too noisy. But ideally, coming down into this swing here would be ideal. And here's main threshold of this order block that lines up with 22.5 here. So um, I like this as a target as well. So I'll just put this here. Daily bullish order block, main threshold. Okay, so that's all that I have for the daily. That's what I'm looking at. Mm, teacher is not online yet. Yeah, it's not online yet. So let's go down to the 4 hour time frame. I usually don't look at the other indices. Like ES, I used to be married to ES. ES is still within its Friday's range. So maybe get a swing low here. All right. I'll just mark this out just for. All right. And then Dixie running into an inefficiency. And maybe this is like a mitigation zone here. So, and we just hit it twice so far. So let's see how we continue to respond to this area here. Bearish for the block up here, fair value gap. So we could very well run it even deeper into this premium here or discount from here to here. I think the sweet discount premium might be above that. Dow, bullish for the block down here in Dow. Definitely believe we can come down here, continue up as we come down here in this inefficiency here on ES, and then NQ and maybe ES, we take a swing here on that sell side liquidity and continue moving up higher. After Dixie runs up here into this inefficiency, maybe the rebounds to come down to here for these higher time frame sell side liquidity. Okay, 4 hour. All right, so there's a lot going on this chart right here. We got some daily levels and we have some. I mean, just got a lot of shit. I want to take a look at. I mean, one of the things that we need to do is now create like a folder for our like discount levels for the daily and maybe weekly, because not all of them are valid, but nonetheless, all of them are still here. So one thing that I see immediately here, looking at this, is this weekly target. This weekly. Okay, so I didn't even name them. This weekly. I think what is it? Sell side liquidity on the weekly? Yeah, sell side liquidity. Let's go back to the weekly. Take a look at this. Yeah, so that's just a weekly sell side liquidity. Oh yeah, I told myself that I'll keep it up there because we may run back into it. But these relative eagle lows on here, we took those out yesterday. And again, it's something I want to keep on there, but I want to get rid of that. We have a new day opening gap down here in a premium, or I'm sorry, in a discount within a premium of the weekly range. But this here is, lower, so One, two, three, four. This was yesterday? Oh, this was this morning. Four candle run. Almost five run up. So this is showing weakness. If you ask me, this is stage one, come down, maybe stage two, right? And then, I believe we're going to continue coming down for these lows here. We have this as a target, which is 5.5 of this bearish for the black here on the 4 hour. That lines up pretty nicely. And then down here, we have another confluency, but nonetheless, these confluencies are looking 11 lines up with this weekly mean threshold. I want to look at six. I had six lines up perfectly with these lows down here. So I want to mark this out as potential target for today. All right, so that's a target. This is 4 hour, 4 HD. Yeah, so we'll put that there. This fib, we can throw him in there. Let's take a break from the weekly really quickly. And daily, take a break from the daily. New day opening gap, we can just throw them up there as well. So that's what I see. That's the market maker model that I see on the 4 hours. So next thing that we do from here is drill down to the 15. Get a new day opening gap down here that lines up nicely. That's a new week opening gap. So we opened up here on the week, so we definitely can come down here. This is a low of this inefficiency here. So what I want to do is take a short position, just log into Robinhood. It's just a paper trade. Well, not even a paper trade. I'm just adding a contract to the watch list. I think Nvidia comes out with earnings on Wednesday. Earning reports on Wednesday. So, September 4th. Although I like to aim for Fridays. Let's see. So that's a six. Yeah, go there and look at a put position. And I'm on a target. It's 6 a.m. So I'm gonna look at like Thursday, Wednesday. Wednesday at 2 p.m. So this data is delayed. Wait, go back to QQQ, please. No, NQ. I'm on target here. This is Thursday at 10 a.m. But what date is it? This is the 15th at 10 a.m. Let's make it a little larger. Oh my God, the bells are gonna open up in 10 minutes. Thursday at 10. So like right here. That was a high. We're practically there. This is a 472. The low here is 468. Nah, I'll go for the low. 468. Add that to watch list. Again, no pressure. We're just going through flow of the motions and getting back in to the swing of things. Well, so ICT just posted up two videos so far. He's taking two trades. One on NQ, one on ES, both bearish. So I guess I got the right sentiment. I want to look on a daily. We have this inefficiency here on a daily, right, that we're targeting within this higher time frame inefficiency. So that looks good. And then we have that daily mean threshold here. So, this could very well be our second target for today. Target two in daily order block mean threshold. So this would be like my ultimate target. We may be able to get there by the end of the day. And we do have this new day opening gap down here. So 22.5 here is the OB on the daily time frame. So, and I'm sure we have some more confluencies here with this. So let's just change this to we have to turn these on, turn these bad boys on. Do we need all of these? You know, maybe not, but I like to see confluencies. They're our friend. 22.5 lines up pretty nicely with this 8.5 area. -9 lines up with the daily. So yeah, these are, in my opinion, legitimate targets. Um, and it may be a bit overzealous, 300 points, with one macro, even a mini, just holding on to that and then trailing our stop loss accordingly is the name of the game. Especially for like an option position, you know, definitely not a bad idea. So this 4 hour, this fib, I'll just hide that there. Um, See, we have a draw and liquidity here, maybe a little small little retracement on the higher time frame or lower time frame, excuse me. All right, let's look at the 15. So we have a market maker model on the 4, and we had a market maker model here on the 5, and we failed to return back, so that just shows weakness. So very good job on that. All right, so we have accumulation here in discount. Our new day opening gap for today's here, and ran up above it even into previous day, new day opening gap, and new week opening gap, and we have relative highs up here. So these aren't a target that I'm looking for today per se. So let's call this 15-minute premium. So we have that up there. Those are some relative highs, and this is accumulation. So we have accumulation here, manipulation, distribution, stage one, and now we're running back up, probably to form some type of manipulation. 1, 2, 3, 4, 5 candle run. This looks good, so I will take a fib on this. And we have a daily new day opening gap that we respected the constant encroachment of, so this is all looking good. And so we could very well run up into here. I'm just gonna put alert here. All right, so I'll put alert here. These will be areas that I would look to enter into a short position, like a continuation. I do believe this will be second stage. Um, Second state, yeah, distribution. 5 candle run. That looks beautiful. Let's look at the 5 really quickly. 1, 2, 3, 4, 5. Perfect. Stage one, stage two, accumulation. So this could be the return of the market maker buy model on this side into this area for a continuation to the downside. We could even look on the one. So on the 1 minute time frame, um, try to run in here already, come down, still working within this one. Notice how we didn't like displace above aggressively. So, I mean, that's just to me showing weakness. But Belt Eagle highs up here. Definitely come for these highs up here. See how we have this negative sell side? This is beautiful. So this is our mitigation zone from the day before. So we could definitely run up bits in here, get a mitigation on the higher time frame, take out these Belt Eagle highs up here. One, two, three, four. Run into there and continue to the downside. And we have some Belt Eagle lows down here that we left behind just to give us a magnet to come back down to the downside. All right, I gotta make a pit stop. I'll be back in a jiffy, in a couple of minutes. So market will probably open up by the time I get back. That's all good. Uh, with me, I wish when we set this auto, it like adjust and look pretty, but whatever. I'll be back. All right, I'm back. Let's do this live. So I feel good with my pre-market analysis. See what Sensei is talking about. Yeah, we have to look for the open range gap. Here it is right here. So we want to see if price wants to move into this open range gap here. Right, so we can extend this out to the right. Oh, so ST says that that's why 75% of the time it'll run up and take out that mid body. Let's see some hideous color. Save as, and then we have our first fair value gap as well. Um, ORG, open range gap. So we'll just put that there. We'll just keep them here. So this one, we'll just rename him to August 27th. So everything outlined technically. So that's a mid gap there. We can go back to regular trading hours. So we took out buy side here. That's good. So ST says that usually when you open up like it, this you should come for opposite draw on liquidity and then look for a continuation back up. So this here, bull trade block here, right at the low of this daily fair value gap here. So now we're moving up. You have a wick here. So mid gap is what we want to look for. Does it hit there in the first 30 minutes? ICT says 75% of the time it does. And then goes for its move. So it's also uh aligns with like the Judy swing in the morning. So try to pre-measure this gap here. Constant encroachment is here. So yeah, we could do some projections on this, but I'm not looking to be long. I'm not looking to be long, so that's the reason why I'm not looking to do any projections on this. I'll be here. Ooh, 478 lines up nice with this bull short block here. Perfect, right? Stage one. I want to see this at stage two. Continue to the downside. So again, look for that fair value gap in an open range. Oh, come on, internet. So this gap is the only gap that has been used. It's not within the 10 o'clock range. So 10 o'clock range is we're looking for a gap that's forms before this line here. See, there's sort of like forming on 15. I would like to see that. So we're missing some a move right here. So we here we have a first fair value gap here. So we may see price want to move back into that, right? So as I suspected, take out draw liquidity here. Let's see. Um, this is like 11 points. 15 is up here. It's permissible for price to run up here, and then 50 points down here. So this is about 5 to 1 mentality, 5 to 1 mentality, 5 to 1 risk to reward ratio. So that's good. And I want to see this remain. I want to see price continue to go below there. See if we can get a 5 candle run with our 5 minute time frame. 1, 2, right? So we can also get that on the 15 as well. So that'll be like an hour and 15 minutes on the 15. Um, I want this. See how this is inverse fair value gap. This, and we run back into it. Continue coming down. So my alert to come in here wasn't hit. So I came close to it, but didn't hit. And then we have a big news driver at 10 o'clock, so it's best to just go light. This is perfect. It's beautiful. Here's our first target right here. Oh shit, this is our 15? No, that's not our 15. What is this here? Oh yeah, so we get rid of this. Where's our 15 at? All right, come on, let's get this organized. Here it is right here. Hmm. Lines up target one. Lines up with target two. All right, beautiful. Beautiful, beautiful, beautiful. I'm just gonna throw them in there. That's fine. Okay, we get a vertical line here. So we have our ORG fair value gap already. Not entirely sure what this fib is about here. That's good there. ORG here. That's fine. Throw him up here. Throw him up there. Throw him up there. I'll just throw him in there. Zero open range gap. So weekly targets. ICT. So that's there. I like how we ran up in there. Boom. Mitigated. I don't know what the hell that is. Whatever. If we were to clean some of this up, um, I would want to hide this one. Here's that daily fair value gap here. Nice fair value gap on a five. And we have this wick here on the five that we just traded through. That's good. I want to see that we can go below one standard deviation of this here. So ICC said some shit about 9:45. I'm looking at this wick here on the five. I want us to come down here to invalidate this as a mitigation block, right? So we got to start calling, draw liquidity here, and I want to see us displace below this to invalidate this as a mitigation block. Because, also depending on where the bodies close on this, we have 3 minutes. Like, here's our mean threshold. If the bodies were to close where they are right now, then this would be seen as a mitigation block. The next candle could come down. I don't want to see that. I want to see us remain heavy to get to our first target on a day. Target one on a day. So the weekly target? I lost my I lost my target. Sorry. Target two. I don't know. I lost my target. It's all good. Oh, here it is, right here. Where's this at? Oh, it's a 4 hour. That's what this is. 4 hour. So I'll just make another wick, or no, not another wick, but another. All right, I'll admit I'm kind of confused. All right, so as I suspected, boom, boom on the five. Did not want to see that. And now we're back. So we got a drawn liquidity on the higher time frame on the daily. This is daily fair value gap. Got a nice drawn liquidity. Notice how the bodies are respecting this fair value gap. So target one has not been hit. I mean, this is obviously the first target here. Drawn liquidity, high time frame, busy. So, uh, it's all good. Inefficiency here. So right now, I mean, one of the things we could look at is this here. Carrying down one, two, three, four, one, two, three, four, like five. Went up, down, this displacement. Not sure why this is here. Just left around, left a breakaway gap here. So it's no accumulation, manipulation, maybe distribution. 8 minutes until the new big news driver. Um, so we could very well see if this remains supported. So far, inverse. Run up, take these sides up here, and continue to the downside. Okay, this is annoying. Boom, look at this. Nice. All right, so boom. Target's been hit. Inverse fair value up here. Opening range gap. Well, this is opening range gap. This is new day opening gap here. So we're moving back into this range here. I already marked this out, so I know where our inefficiencies are optical trade entry. So now we can look for a potential reversal. Or we may accumulate. This could be stage way, accumulate. Realty go highs up here. Take out sell side on here. This fair gap high was respected by this candle here. Displacement respected. And we displace, continue displacement, big fair value gaps over this here. Coming for these highs up here. Realty go highs. And these highs up here. So we do have an inefficiency up here. And I do recall doing something like this. Quarter projection here at the high of the market maker model. So stage one, although we don't have a market structure shift, stage two, although I was looking at this would be stage two retracement, but 4 standard deviation lines up nicely with this. So this gap has been balanced close to. See if this new day opening gap body can remain. So we could, although I'm not looking to go long, because news in like 10 minutes. or 3 minutes at 10 a.m. Right here. The low. Could see that tree here. Pass on the 15. Accumulation. It's nice. This looks nice. Accumulation. One, two, three, four, five. Accumulation, manipulation, distribution. On the 15. One, two. That's good. So you get it confluence with the high time frame. -1. 4 is not here. Not bad. So we could see a reversal here. Very good. What else are we missing out on? So we can go to regular trading hours for the new 4 hour. Any rejection blocks here? Kinda. Oh, this looks good here on the 5. It's really good on the 5. See this? This week here, ×2. It's the high here. So this is a rejection block on model 14. And I did take off my fib. Let's go back to the 5. That looks pretty nice. Mhm. So this side here would be better. Just like here. Stage 1, stage 2, accumulation, manipulation, distribution. Low, high, lower, low. That's better. And then look at the quad here. See that? Model 14. Boom, perfect. Here's our 10 o'clock. Provide gap here on the 5. That was inverse. See the third man's open. So for this to remain model 14, we would have to stop at constant encroachment of that wick, but we're not. So what we may get is buyer respecting optical trade entry and get a swing high here, which would be the end of this price leg. And then we have this bullish order block here supporting possibility that we can run up higher on the 15 when standard deviation lines up with their daily volume imbalance. We're in a 4 hour, whatchamacallit, so I'm not looking for longs. But in terms of that long position or that short for that put, I mean, it could definitely come up here. I don't want to see us move up there. See that? 2, 4, 4, 5, 4. See that? Another 15. Accumulation. And here we are on the 15. This is a bullshit block. So we are going long. Notice daily opening gap here. See that? See this look here? This is a rejection block. See that? See those bodies or the wicks there? See that? See this here? So we're stuck in a range, so these are like a high risk plays that I would get caught up in and just trading both sides, chasing price. Whereas this move here from a higher time frame drawn liquidity is obviously the best entry. This is almost 100 points. Did I see this move coming in a day? No. I was looking for this move down here, so I was biased. But having had I had this drawn out as a potential drawn liquidity, it would have brought my attention to the fact that, hey, we could see a reversal, especially after this one, two, really two, three, kind of four, kind of five kind of run, and then the buyer's respecting this. So that's like our first indication, like, hey, reversal, right? And I think I did look at this here and wasn't too impressed with this, but nonetheless, this is accumulation, manipulation, one, two, three, four, five, distribution. See that? So we are at 10 o'clock. Let's take a look here. Let's get rid of that. How the body's closed above here. So seeing something like this would convince me to get out of that option play. See relative go high, relative go lows down here. So I will want to put this here. Boom, 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 boom. So we may come down here in the afternoon. There we go. So we can see immediate rebounds right here on the 4 hour. All right. So I'll mark that out. We run up here, boom, come back down here. Take that out. I'm curious, what is this? Mm, interesting. See this low here? No, unless we can now, it says low, right? Took out that low there. It's a nice one. Nice one. I didn't see it. Maybe I overlooked it. And then on the daily, boom. So tip, boom. Pressure to the block, boom. Still convinced we're gonna be pretty heavy, but nonetheless, we'll see. Trying to guess where we're gonna move here is possible. As soon as that, I thought we were gonna go down, but yeah. So bullshit or black. So I was right about that. This is confirmation on the one run up accumulation. Then we saw that market maker model on the 15, and we failed to go down below 50% before we accumulate again. So that tells you that we're still strong, right? So therefore, we're moving up higher. Still good. And then we have one, two, three, four, five. You called it. You called it. You called it. You called it. Then we got our accumulation, manipulation. Well, we took out buy side, so we went up. Boom, boom, boom. Called it accumulation, manipulation, distribution. Who called it? You called it. You called it. Very good, Tracy. Very good. One, boom, reversal. 2.5, one, boom, reversal. You called it. Where we going here? 2.5 here. Four for these buy sides here. That's a possibility. Accumulation, manipulation, distribution. Boom. Come for these highs up here. Oh, what lines up with those highs? Previous day high. I don't know. Is this previous day high? This is a. Oh, we gotta get this shit together, bro. All right, what color is this? This is purple. Oh, that's the label. I don't care about the label. Um, it's like that, and you have. Oh yeah, it's just previous day. Previous. Oh, this is the new day opening gap. There we go. So weeks are blue. Oh, no, I kind of like the black. Yeah, we're coming up there. Accumulation, and you call this one here. We're done with this. We are on a 4 hour market maker model, which is why I'm just saying, hey, stage one, come down. I thought that was stage two, but no, apparently this may be stage two. And on a five, accumulation, stage one, stage two, maybe. 1, 2, 3, 4, 5. 1, 2, 3, 4. See how these two are within the same range? Five, accumulation, manipulation, distribution, no accumulation, manipulation, distribution. Remember, the first move is always going to be in the direction of the distribution, right? You have that in your notes. Don't believe me? This is the false move up into high time frame target, followed by a sharp move down, manipulation into P array, then move higher to high time frame target. Look for first move AMD to be the precursor to the manipulation. If it is in the opposite direction of the high time frame, draw liquidity or fair value gap. Here it is here. It's in the opposite direction of the high time frame, draw liquidity, which is down here, that 4 hour fair value gap, which we got. Boom, right up. Stop playing with me. Stop playing with me, boy. Stop playing with me. Stop playing with me. And here we have a new market maker model right here. Accumulation, manipulation, distribution. Then we start down on a new price leg. Stage one, stage two, accumulation, manipulation, distribution. Stop playing with me. And then we did this already. Low, high, lower, low, come down almost, and then move, moving up, coming for these highs up here perfectly. 1.5. Do we have a 1, 2, 1, 2, 3, 4? Multi glass up here. She just load this new day opening gap. See, coming here. See, new day opening gap. Or not new day opening range gap. Wow. Hello. 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 One, two, three. That's a five. Oh shit. We on the five, bitch. We on the five, bitch. Now it's this new day opening gap here. We're still going up higher. Boom, 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 boom. Rejection line, mile 14. Boom, 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 boom. One, two, three, four, five. Boom, 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 boom. Silver bullet, silver bullet, silver bullet. So these are my targets up here. I want to see this target up here get hit. It will be interesting to see if we come back down below here for this 15-minute, respecting this new day open, this opening range gap. 5 minutes, no. One, two, three, four, five. It's possible. Pulling Fair back up here. Boom, target hit. Silver bullet, silver bullet. Could run up, come down, keep coming. Like optical thread entry. Low, high, low, low, run up. Boop. One, two, three, four, five, maybe. And look here. Boop. See, we get inverse here on the one. I doubt that we will though. But that is a higher time frame draw on liquidity that we marked out this morning. So we probably have another 15 minute after this 15-minute cycle before we can look for a reversal or retracement. Just moving into this inefficiency here. So from here, right? So this is a, oh yeah, definitely this is a target. Ding, 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 ding. So let's put that there. Me not high, low, low. This is market maker model, except we don't have retracement. See how we ran up here first? Came down, boom, water block, market shift, and displacement. So that's good. Oh shit. Potential optical trade entry here. Top of this thingy me this weekly. Maybe. Drawing liquidity. This center fit. I don't think it's gonna work. If it doesn't work, then that's good for a reversal. 1, 2, 3, 4, 5, maybe. Oh, maybe it is. Boom, body's respecting it. Still bullish. I want to see a move up here. See if we get a body close above here. If not, be drawing liquidity. Notice how we have a new five here. Body's respecting it. See this? This looks like a good short position. Ooh, that's pretty high. Come down here. Should the buyer's respecting his wick here? I like that. One, two, three, four. No, five would have been ideal if this was five on the 15. Here's that four run up here. Maybe come down here, run up higher. Accumulation, manipulation, distribution on the hourly. I skipped the hourly. Yeah, so me and we had a market maker model going down on the five, stage one, stage two, boom. So market maker model going down to the downside, and we had accumulation and manipulation distribution. So that's what that's about. No, this here, opening here, bull luck, so it's something interesting. Come on. Boom. Target hit. 1.5. I'll go trade entry. Fab can run up. Hmm. Fair value gap right before the quarterly shift. Oh, you don't say. Look how we got that reversal right at Q3. Boom. Perfect. Perfect. All right. Think I might be done with this. My target. This idea here worked. Hypothetically speaking, 75, 76 points, two contracts. That's decent. About 20 points, two contracts. It's decent. So to hit midpoint of my combine right there. And then of course waiting for this. This is unbelievable. I gotta review see what I was thinking when price came back down here. But I'm gonna cut the stream off. So far so good. Very good job, Tracy. Very exceptional job. I love you. And I do believe we're gonna see a reversal here. Let's just wait. I don't know, for this last 15, you know, like this here. So let's just wait. Here we have accumulation, maybe manipulation. 2.5, rejection block, still good. Stage one, accumulation, looks good. All right, so we did get our reverse as I suspected. I mean, we're obviously in a buy program, but we could very well come way up here for these relative equal highs up here. Lines up nicely, right? Displacement over here, so we're still moving up our. So this is good. Very good job, Tracy. And 647. 647. Still there. Anyways, yeah, we'll be back tomorrow. Good job.